Hi everyone. In this video, we'll do a full financial audit of a scientist who has completed his PhD and has been in a job for about 1.5 years now. He has two small kids and he is the only earner in the family at the moment. So let's start with the cash moving into the household. So the husband is the primary earner, bringing home a base salary of 7,600 every month, but he also commands two major corporate perks. So he gets a 6% company match on his 401k and a 9% annual bonus. So before this money ever hits into main bank account, they automatically save 27% of his base salary. Every month, almost 1500 goes into his 401k and about 600 goes into health saving account. After taxes and basic insurance, their normal monthly take home pay is about 4,100. So when we scale these numbers out over a full year, their total compensation package becomes 115k. And look at how beautiful optimized their breakdown is. About 54,000 is their take home pay, but because they fully leverage their corporate benefits, they get an extra 6,000 a year from his employer's 401k match plus an annual target bonus of 9,000. So shifting more money into a pre-tax account drops their annual tax withholding down to just 12,000, allowing them to stack assets rapidly. So now let's check out their asset columns. So as he has started his job just about 1.5 years, and they have saved quite a lot. So at moment their net worth sits around 80,100. So they have 34,000 inside his 401k, 23,000 in a individual brokerage account, and 14,700 in their health saving account, and 8,200 in a Roth IRA. So they are currently renting, which means their real estate equity is at zero, while their long-term retirement compounders looks excellent. Keeping only 2,000 in a liquid saving is a major operational hazard that we need to clean up. But here is the single best part of their entire balance sheet. They have an absolute zero debt, no student loans, no car loans, no credit card debt, and no mortgage. This total debt freedom is a massive financial advantage. When you take their 80,000 in assets and subtract zero liabilities, their net worth is exactly equal to their asset position. Let's look at their monthly bills. So their core fixed lifestyle cost sits around 3,700, which includes their rent, the groceries, and other expenses. So because their standard monthly base salary leaves them with a surplus of just 450, their normal monthly budget can feel tight. But this is exactly why his 9% target bonus serves as the ultimate pressure relief value for the family. This family has two major goals over the next 3 years. So they want to go for vacation, and they are anticipating around 12,000 for the vacation. And he also wants to upgrade to another car, but he's still thinking to buy a second hand, so he's thinking somewhere around 20,000 for that. And so instead of making the classic mistake of selling off their investments, they plan to fund this through their bonus. So every year he gets like 9,000. He wants to use that bonus, and also the any extra expense that would come, he wants to do some side hustles, and maybe 300-400 a month should be enough to cover these costs over 3-year period, including his bonus. Now let's look at their financial health scorecard. So because this family makes almost every core financial decision correctly, they earn an exceptional score of 9.2 out of 10. So why they have such high score? Let's look at few of the important things here. So first off, they have total financial clarity. They exactly know their numbers. They exactly know how they can maximize taxes and all those things. So they are highly savvy. They track their numbers and know exactly what they want to achieve. Second, their absolute debt freedom keeps them in a flawless position. Third, still renting at this income is actually a highly strategic choice for them. They can happily keep renting until their total saving accumulates to a larger number. And while I was having a conversation, he says he wants to first reach to like 500k before he would go into buying a house. Or in the meantime, if his income, if their family income goes to a higher number, then they would have a calculation, and then they want to buy a house without touching the assets, the invested assets they have currently. And fourth, they are maximizing their tax advantaged account. So if they were not using this 401k, if they were not matching this, they would be losing this 6,000. And also because they are, instead of just matching, they are maximizing it. Almost 20,000 in a year is going into 401k, and also like 8,400 goes into their HSA. They are able to save a bulk in taxes. If they were not doing these two things, like say putting in 401k and HSA, they would be losing an extra 10k a year just in taxes. So they did this calculation, and that's how they are putting maximizing these two tax advantage account. So on top of that, they also understand that cash is trash, and you can look, all the money they have, it's not sitting as a cash in any of these accounts. They are investing them into equity. The only thing that is highlighting to me is the savings, the emergency saving they have right now. They only have about 2,000 in their bank account. But when I talk to them, they say if there's a need, and because they have zero debt, zero credit card loan, if the need comes, they could just get a 0% credit card and use that in case of emergency. But still, I would say it's better if they keep like 3,000 or 3 months of the total expense as a cash. This will be better because they already have a good saving right now. Now let's look, if they continue their saving the way they are doing right now, and let's assume they put nothing extra than what they are currently doing, even if their salary increases or their household income increases, how long will it take for them to become a millionaire? So based on this current 80,000 that's invested in the market, and about almost 30,000 that's getting added every year, it would take them around, if it's a 7% return, let's say, it will take them around 15 years. But if the market gives a average return which is a 10%, they should be able to become millionaire in 12 years from now. And I'm not accounting the potential increase in the income of their family, because right now he's the only earner, and in few years his wife might be contributing, or also his salary might increase. So without accounting those things, even if they do what they are doing right now, they should be able to become a millionaire in 10 to 12 years. This is all I have for this video, and if you like this content, please subscribe, and I will be coming with some more videos